How are you doing, guys, and welcome to the channel. In today's video I'm going to explain what volume profile is. Whether you use it on its own like I do or add it into your existing strategy, volume profile is a must for every trader. By the end of this video you will have everything you need to add volume profile into your trading. The foundation of volume profile is auction market theory, which is basically viewing the market as an auction. Auction market theory is a framework that views financial markets as a continuous, two-way auction where buyers and sellers interact to facilitate trade and discover fair value. There are three core principles that govern this auction. Facilitation. Buyers will try to pay the lowest price possible and sellers will try to sell at the highest price possible. Price will move up until buyers won't pay anymore and down until sellers won't accept any lower. The primary goal of any market is to bring buyers and sellers together. Price moves between balance and imbalance. The longer price stays, the more accepted it is. Volume is what measures the auction success, confirming acceptance or rejection. Institutions leverage this framework to identify optimal execution points, the foundation of volume profile analysis. So what is volume profile? It's a horizontal histogram that maps the trading volume at each specific price level over a defined period, revealing where trading activity happens, not over time, but at price. The value area is the price range containing 70% of total volume. The value area high marks the upper boundary, the value area low marks the lower, and the point of control marks the price level with the highest traded volume and can be considered fair value. Unlike traditional time-based volume bars at the bottom of a chart, volume profile rotates the view, exposing the price levels that matter most to institutions. The key volume profile levels you need to know are the value area high. This is when price is at a premium, so you can expect selling pressure or rapid continuation if accepted by volume. Next is the value area low. This is when price is at discount. You can expect buying interest or continuation lower if accepted by volume. Next we have the point of control. This is the price with the highest traded volume and acts as a fair value magnet. Price frequently returns here after moving away. Next we have high volume nodes, which are these large clusters of volume. These are areas of strong acceptance and act as powerful support or resistance when price revisits. And finally, low volume nodes, which are the opposite. These are thin volume zones where price can accelerate through quickly. So how can you actually use volume profile in your trading? High volume nodes and point of controls reveal where significant capital transacted and allows traders to follow smart money's trail. Use the value area high, value area low, high volume nodes and point of controls as precise reference points for entries, exits and stop placement. In a balanced market, you want to fade the extremes back into the value area and expect price to return back to the point of control. In an imbalanced market, where price is closing outside the value area with a build-up in volume, expect high probability trend continuation setups. And lastly, remember, context is king. Volume profile adds crucial structural context that raw price action alone cannot provide. Volume profile does not predict, it reveals. Combine profile levels with session context for the highest quality trade setups. If you'd like to see more volume profile videos where I'll go more in depth into these concepts and show you how I use volume profile in my trading, make sure you subscribe to the channel, leave any questions in the comments, and I'll catch you in the next one.